Welcome back to the episode of my trading vlog, where most of the views come from returning subscribers. If that's you, please give me a thumbs up. If not, consider subscribing. Today, I'm going to do something different. It's Friday, views are going to be low, so I'm going to take time to explain my Elliott waveform count. I know a lot of people aren't familiar with this, and they just kind of scratch their heads and go, and they move on. So I want to take some time, break it down for beginners, for intermediate analysts, amateur analysts, no one here is professional, obviously. And I'm going to do it on Playboy stock. And even if you're not into Playboy stock, stick around because this is the same waveform analysis I've been doing on AMC, GameStop, and SPY. And I've been reaching those targets with a lot of accuracy. You can follow me on Twitter. That's where I'm sharing a lot of that. I'm trying to do at least 3 charts every single day with a few targets, and they aren't necessarily intraday targets, but this helps give some cohesion and narrative to my analysis, and you can follow it more closely. I'm reaching price targets all the time, and I'm sharing that here. Follow me on Twitter, turn notifications on, and you're gonna see the effective use of this waveform analysis. And it's not like my thing. This is definitely not something I came up with. It's just something I learned, and I learned this when I was starting to trade the meme stocks, AMC specifically. And really, it didn't even start here. It started with Bukowski's chart patterns. But those chart patterns, guess what? Chart patterns are a simplified form of Elliott waveform analysis. Unfortunately, if you don't know Elliott waveform analysis and only chart pattern analysis, you're not going to get the same predictive understanding of the markets. There are some logical rules that dictate the way that price moves if trends exist. That's the assumption, is that price move in trends. Obviously, they move in trends. No one has to argue that. It's there. We can see it. No argument. And if there's a trend, some logical rules are going to apply. I think the easiest one to grasp is that in an uptrend, the sum of all the moves up will be greater than the sum of all the moves down. Simply put. And that gives us our first rule in Elliott wave analysis, that retracements, wave 2 specifically, cannot completely retrace wave 1. And there's 5 waves in a motive wave trend. Okay? 5 waves in a motive wave trend. In those 5 waves, there's 2 corrective waves, 2 and 4. You're going to notice 3 motive waves making progress in the trend and 2 corrective waves. There are more motive waves than corrective. Again, the sum of all the uptrends has to be greater than the sum of the downtrends in an uptrend. And that's why you have 3 motive and 2 corrective. It's the most efficient way to establish that, to provide both fluctuation and trends and variable moves in the price. That's the logic for waves 1, 2, and the 5 motive wave count. All right? Within waves 1, 3, and 5, those trend motive waves, there's going to be 5 more waves, and guess what? In those 5 waves, there's two corrective trends and 3 motive waves, and that's how we start to build these fractals. We're going to walk through it one step at a time. I'm showing 3 wave degrees. There are 9 wave degrees in Elliott waveform analysis. We're going to focus on 3 of them. That's really all I think you need. Once you understand that those degrees are just like a clock, they cycle, they fractal. It's not like one. It's not a stack. It's not like a ladder where you climb one rung to get to the next. It is in a way, but that ladder would have to be wrapped in a circle. As you know, price can do whatever it wants, so it needs to have the ability to make exponential moves, and it does that through fractaling, through the extension of these waves, and that typically happens on the 3rd wave. The most commonly extended wave is wave 3. That's something else to remember. Now, this is a tendency. In Elliott waveform analysis, there are rules and there are tendencies. It's important not to get them mixed up, because if you think tendencies are rules, your counts are going to be very difficult to form, because a lot of times you get clashing wave degrees. And when wave degrees clash, you get certain shapes and certain patterns, and that's where we get our chart pattern analysis. Chart pattern analysis is a simplified version of Elliott waveform analysis. And unfortunately, as it is simplified, you get less depth and understanding of price movement in chart pattern analysis, which is why I picked up Elliott waveform analysis. I was doing Bukowski chart pattern analysis. Check out thepatternSite.com. That's where Bukowski shares a lot of his statistical analysis, which is amazing, by the way. Absolutely check out and follow his blog. Anyway, I was following that, and I started to understand that I would need this Elliott waveform analysis, and so I read this book by Frost and Precher covering Elliott waveform principle, and now my charting is a lot better. It's a lot better. we understand that in a price trend, there's 5 waves heading higher, 3 motive, 2 corrective. And within those 5 waves, waves 2 and 4 are corrective, and wave 3 is probably going to extend. We know that wave 2 can't completely retrace wave 1. Now, there's another rule that we need to know, which is that wave 3 can't be the shortest wave. And wave 4 can't push into the price range of wave 1. And again, it's about making progress. So if after that third wave higher, wave 4 comes down and pushes below the peak of wave 1, we're not making progress anymore, right? Hence the trend break. Here we go. We're going to explain all of this through here. I know that was a lot. We're going to walk through it one step at a time, and we're going to start with trends. To form a trend, you need a series of higher highs or lower lows. In order to do that, you have to have the price first establish a peak or a valley and then surpass it. And at that point, you can drop down the trend line. For instance, this green trend line, this would not be here until the price were to pass a previous peak. And we're going to start from this low because this is a pretty good low, good downtrend. There's ultimate low here towards 147. Price ran up to 159. Pushed down for a retracement. We still don't have an uptrend yet. There was a small uptrend through here, but that broke. So we're looking for a bigger trend, and it doesn't set or confirm until price pushes above that level the next day, in which case we can put this trend line down. And so here you go. In 24 hours, we're suddenly drawing a trend line. And to do that, we simply take the low, we find that high, and then we pull the trend down until we aren't cutting through the price at all. And that's going to form our uptrend. And you can see that trend hold for a long time. That trend was set in 24 hours, and it was valid for 1, 2, 3, 4 whole days until it broke in a corrective trend at a higher wave degree. Pretty crazy, right? Those trends, they come in quickly, and that's how we're able to make these price targets. As soon as that trend was down, I would have taken my Fibonacci extension tool, which I have shown here in yellow, and I would have taken the bottom of that valley to the top of that peak and pulled down to the extent of the retracement. What this is going to do is it's going to project the amplitude of this first impulse wave, and it's going to add it to the bottom of this corrective wave, and we get a target at 165. You can see that price passed the peak of this initial push up towards the middle of the day, it looks like. And then later that day, actually reached that target. And so as we pushed above there, this would have been a good trade to buy and sell here. It was a small move, of course. It's a small wave degree. It's the smallest wave degree I've shown. It's at the 7-minute level. So maybe if you're day trading, that would have been a good play there. This is how we do the price targets. Now remember, I said that wave 3 typically extends, and you can see in blue at the minuet level that we've had waves 1 and 2. And so rather than call this wave 3 at the minuet level, I'm going to use the sub-minuet waves to build out an extension of the third wave. And so I count 1 instead of 3. You can see that the RSI here is reaching overbought. When I use the RSI in the Elliott wave count, it's very informative. I talk about bearish divergences, bullish divergences, they break, why they break, and when it's bearish or bearish to actually reach the extremes. And this is how I do that. Looking for a motive waveform through here, seeing the price hit overbought is bullish because we're going to see the price hit overbought a couple more times as the motive wave completes. Waves 1, 3, and 5 commonly hit overbought, very commonly. And something else you're going to notice too is it's between waves 3 and 5 that we get that bearish or bullish divergence. Yeah. So I'm going to run through this again. Wave 1 at the minuet level, 2 at the minuet level, and then we start counting sub-minuets for 1, 2, and you can see 2 dips, test the uptrend, bounces, forms a triangle, which is an extension. There's like a V bottom through here. And then price breaks up for a wave 3, which was pretty exuberant. You can see how steep and how sharp that incline is. This is wave 3. It's what wave 3 does. And this is the third wave of the 3 waves. So it's pretty strong. Pushes up, sets a strong high, reaches the 161.8 extension of that initial impulse, and retraces for wave 4, which happens in after hours. You need to do your analysis based on a complete set of data. That's why I show the pre-market and after hours, is because it does count. It's all important. What's less important, I think, are the open, high, low, and close. I mean, open, high, and low. Yeah, not the close. I want just the close and the price. Candlestick charts, they give you those price extremes, and that's a common mistake I see, is the RSI being used to find divergences, but in intraday price extremes. The RSI is based on the closing price, and so when you use a line chart and you're only showing the close, then your line chart price data and your RSI price data are more closely aligned. So you can just strip away some of that miscellaneous data of the intraday and the open price extremes, and then also make sure that your RSI and price data are correlating properly, which here they are, and it's really nice. So we came down for wave 4. You can see that wave 4, I'm calling that a sharp, and wave 2 was a sideways. Between waves 2 and 4, we commonly see alternations. This is not a rule. This is a tendency. A lot of tendencies. Remember, the only rules are, at least that I follow, wave 2 can't retrace wave 1. Wave 3 can't be the shortest wave. And wave 4 can't push into the range of wave 1. That one actually has a couple of exceptions, which we won't go into. So here we go. We have wave alternation, which is a tendency. Very nice. Price pushes up much higher, and we reach 186. So back here, when we started our motive wave count between 147 and 159, we could have gone long through here, and we would have been peaking out towards 186, which is a very generous return percentage-wise. Pretty sweet, right? And there's not really a chart pattern through here. Perhaps you may have been tempted to draw some sort of rising wedge through here. That I guess you could have done that, in which case I would have called it a leading diagonal triangle, which is something more advanced. We're not going to touch that right now. So we've had our 5 waves at the sub-minuet degree, and that builds into that extended third wave at the minuet degree. This of course is not the actual completion of a new motive wave, which I had labeled here. I'm pushing this over here so it looks more correct. After wave 3, we get wave 4, which here is kind of a flag. Yeah, it's absolutely a flag through here. And I was hoping to see this break out, but our third wave had already extended. So asking for a double extension there would have been a tall ask. It would have been cool, though. You're going to notice that this is kind of a sideways correction. It's not as sharp as 2. So this is a 2 sharp, and this is a 4 sideways. Again, these waveforms, they're alternating in form. All right? Typical between waves 2 and 4, the corrective trends. Getting rid of that, because it clears my charts. We find the low wave 4, and price pushes up a little bit to peak out at 5, and you can see that wave 5 didn't actually pass the top of wave 3. This is common. This is called a topping pattern of a truncated fifth, when wave 5 fails to pass above the peak of wave 3, and this is not totally uncommon. Now I want to back up a little bit and talk about the RSI, having completed our 5 waveform count through here at the minuet degree. You can see that the RSI reached overbought at sub-minuet level 1 at waves 1, 3, and 5. Pretty cool, right? And you're going to notice that there's a divergence right here where the RSI sets a lower high as price sets a much higher high. This is a bearish divergence, and it typically signals that the price is going to go into a corrective trend, which it did, wave 4. Fancy that. I'm just going to take this trend and extend it sideways. You're going to see that that trend broke as we saw wave B of the ABC correction reach the peak of its bounce. And again, you're going to see that the RSI here reached overbought once and then turned down, because wave B is corrective. In a corrective wave count, waves A and C are motive, wave B is corrective. And again, you're going to have A and C motive, 2 motive, 1 corrective. If you're going to form a trend, like a corrective trend, you're going to have more price action in one direction than the other, hence 2 to 1. Now this is, of course, reacting to the prior 5 count waveform, which was 3 motive, 2 corrective. You can even think of it this way. Price moves in 3 motive, 2 corrective for a 5 wave count, and then moves counter trend, 2 motive, 1 corrective. I hope that makes sense. Anyway, I'm just going to move on through here. So we peaked out at wave 5 and we started an ABC correction, and I don't have it shown here, but there's a small ABC correction at the sub-minuet degree here that builds out into wave A. Wave A is a motive wave. Again, impulse waves can be 3 waves, right? Well, there you go. There's another example of that. This is a measured move down. I should have shown this in yellow. The price target was down here at 166 and the price reached a low at 167. So we were off by a penny. That's, I mean, really forgivable. Honestly, it's a target. It's not a rule. Price eventually did reach that level anyway. So I'm not like just totally worried about it. Go ahead and delete this. But you can see how this A, B, and C broke this uptrend through here. Remember, wave 5 marked the top of our motive wave. So as price starts to drop, we get a test of the downtrend for A bounce up for B, and then C breaks that uptrend, confirming more downside is coming. And this is on the small wave degree. That downside comes at the higher wave degree at the minuet level. The minuet degree bounces up higher, and check this out, it actually comes all the way back up to that uptrend before turning around and heading south. If you had this wave count correctly labeled, you would have known that this was a corrective trend. You can see that the RSI reached oversold once for A, bounced, hit overbought once for B, and then starts heading lower into wave C, which is motive, which is typically more motive than wave A. And I want to say that I typically see that alternation as well between waves A and C, where A is 3 waves and C is 5. And that's kind of a particularly advanced, I want to say, analysis, because wave A is an impulse and it does appear in 3 waves. There is something about that we should be noticing. I'm not going to talk about it here though. To me, it says that the downtrend is going to be lacking sufficient force to really push that much lower, and that we're going to be moving in a weak corrective trend. Here, the corrective trend is pretty strong because wave C extended. You can see that as price pushed down off of B, I started another wave count, and this time it was in the minuet degree, sub-minuet degree, shown in yellow, for 1, 2, 3, 4, and 5. And again, you can see that the RSI reached oversold twice, and that happened when our sub-minuet waves 3 and 5 peaked, or valleyed, bottomed, I don't know, whatever. At any rate, this is where that bullish divergence forms, and then sure enough, we get a bounce, and now we're testing this downtrend set for wave C at the minuet degree. I might as well just put this minuet degree here on this trend, right? Because that's what it is, and we're testing it now. I suspect that it's going to break. We're going to see the price. It might push out above first. It might reject initially. We're looking for that counter trend to this push higher, which would be a small ABC move, right? Let me do this. I'm just going to do some charting here. This first push up, it's reacting to this motive 5 wave count pushing down. Wave C is motive, right, at this wave degree, so at the smaller wave degree of 5, and so we're making that 5 wave count heading higher. We've got A. I'm going to duplicate because we're going to have some resistance here. Whatever that resistance is, whether it's a dip before, it's a dip after, it's wave B, and then wave C will confirm as we pass the peak of wave A, and it's likely going to be targeting the top here of this downtrend. Of course, we don't really have those price levels yet, but we can just use a level of support and resistance at 166, which is the 50% retracement for this wave up, to speculate that, yeah, wave C, with the 100% target is at 174, and the extension's at 179. You can see how that is signaling that this reactionary trend here coming up is going to test this downtrend. And I think this will actually form into that 3-wave impulse again that turns into wave 1 before we finish a 5 waveform count heading higher. So on the higher wave degree, we have wave 1, 2, and we're waiting for that 3rd wave heading higher. And we're getting close to bottoming here, and that's getting me excited because if we do that same sort of Fibonacci extension and take it from the minute degree, which is to say from the entire price data through here, and we look up, our first target's at $2 and the extension target's at $2.24. There's a layer of support and resistance at around that $2 mark, and so we can see that even though the price is currently at 168 and recently suffered a pretty sharp downtrend, that the wave count is supporting a push higher to test these other levels. And when you see those levels of support and resistance being or some congruence with the projected Elliott waveform targets, there's a pretty good shot we're going to be heading that way, because the price movement isn't necessarily totally unpredictable. It can do anything it wants, right? It really, really can. But again, if there is going to be a trend, then certain rules will apply. And so if you can find a stock like Playboy that has gone through a pretty extreme trend and you're looking for the counter trend, you can start to figure out what's going on. There was a tremendous downtrend through here, just a huge downtrend. The company was using an old business model, it was out of date, it was overvalued, it made some poor business acquisitions. Price plummeted in this really sharp downtrend, and now we seem to be bottoming in this triangle, A, B, C, D, and E. We're looking for a breakout here in the near future, and you can see that there's a big bullish divergence here between the extent of wave 3 and 5 at a much higher wave degree on the daily time frame. And now price is being supported, it seems, on that uptrend in the RSI. What this is telling us is that the averages are starting to turn less bearish and more bullish. And now we have this basing pattern through here. If we get an upward breakout, it's going to be exciting because it'll be initially a reactionary trend, a corrective trend from this massive downtrend. This massive downtrend is broken, but we haven't seen price push out and up yet to correct that big downward move. And that started at $40. If we take a retracement tool between $40 and $2, even a 50% retracement is going to throw us up to the 20s. And when I look at Playboy's fundamental analysis, how cash flow is moving through the company and what they're planning on doing and how they're changing their business operations, it looks like to me, yeah, we really could have a 10-bagger here on our hands where we see the price run to $20. I really think that's realistic. I don't think that's totally off the table. Rather, I think that's where we're going personally. Zooming into the hourly time frame here, you can see some of these other wave counts I have through here. And so what you saw me just do was analyze this little push through here. And yeah, that is a little push, right? Nice V bottom, big ABC, and now we're looking for that move higher. So out here on the hourly time frame, we can see how 220 actually doesn't look so extreme, does it? It really doesn't. In fact, you might find an inverted head and shoulder pattern through here. You might find a falling wedge through here. You might even find an ending diagonal triangle. There's a lot of different chart patterns. What I see though is the end of a downtrend, and we're going to start that reactionary uptrend shortly. You can see that as we've been moving through this triangle shown in blue, that the implied volatility down here has been falling. That's something else I say. Implied volatility drops as price moves through corrective trends, because corrective trends, remember, don't completely retrace the initial impulse. And so we're basically saying that the price is going to move less, which is basically what the implied volatility is telling us, is how fast and how extreme the price is moving. And so it makes sense that as price is slowing down, the implied volatility drops. I picked up the implied volatility analysis when I was doing options trading mostly, because this matters. Vega is implied volatility. It's in your options contract delta, or Greeks, I'm sorry. And it's crazy. Vega will make you so much money if you can trade it, if you can find the right strike. I'm not going to go into that here. It's really complicated, and I just don't want to. So there you go. This has been a very lengthy explanation about how I run this Elliott waveform analysis, and you can see why I'm bullish on Playboy. It's because the waveform counts I'm seeing are starting to show the breaking of these downtrends, and you can start to see how the motive waves and the corrective waves are starting to clash into a bottoming pattern, and I'm expecting that we're going to see this upward breakout when Playboy's fundamental analysis is really confirmed by the sale or the well, there's a problem there that Playboy currently owns Lovers and Honey Birdette, and these companies are negatively affecting the balance sheet. In fact, almost all of their quarterly losses from the last report was from Lovers, I think. If Playboy can simply cut that off and get rid of it, then the cash flow will suddenly be neutral to positive, and this will change the company's guidance. Their pricing forecast for their equity will change, and they will be more profitable as a company. This news release, I believe, is going to bring attention to the stock and support buying, because the stock is suddenly super undervalued. They've got a great new business plan. They're now a creator-based company, and they're starting to support their creators on a new platform that Playboy has, and it's gonna be great. I really think it's gonna be great. The company's making a huge turn, and I'm really optimistic. I don't follow the short interest much, but if you know anything about the short interest, feel free to post it. Someone on Twitter was telling me that the borrow rate cost was insane. At any rate, I'm gonna keep track of this 15-minute chart, because as long as this 15-minute chart here is accurate, then I can use it to project into my hourly chart and then into my daily chart. And if I can get a couple of wave counts that are really congruent, the more congruent wave count I have over more degrees, the more accurate the price trends become over a larger degree. Does that make sense? It's kind of like triangulation. On the sub-minuet, minuet, minute degree, I have 3 points. If I lose 1 point, then the whole count becomes invalid. But if these 3 points are all congruent and I have 3 more stacked on top of it and those are all congruent, then my targets get bigger, wider ranges of price action, okay, over more time, but it also becomes more accurate. And that's why I get excited about the hourly and the daily time frame. It's because, yeah, like, oh, I need to change my chart drawings here. In a triangle, you're gonna have these three waveforms through here, A, B, and C, A, B, and C. And this actually is probably not A, B, and C. This might actually just be 1 and 2. And this could actually be like A, B, C, possible wave count through there. But mostly, I think, when I turn on the hourly time frame, what I'm looking at is ABC, ABC, and then a motive wave through here. See, this is not an ABC waveform through here at all, is it? Right here, this channel. Not really. In fact, when I draw a channel, you don't even get a downward touch of that channel for a while. And so I'm thinking to myself, this is not a channel. This is probably a falling wedge of some sort through here. Which is exciting, because that would imply that the price is finding a bottom, which it has. So this could be the last motive wave push down on a larger wave degree. You can see that it went from a high of $2 down to 150. That's a 25% drop. This could be the last impulse down of those big downtrends. It really could be. In which case, we could be looking at, yeah, A, B, and C pushing higher. I have it labeled as 1, 2, and 3, but first it starts as A, B, and C, and remember that. Wave 1 impulse can be 3 waves. Which is why I'm excited. Anyway, this has been very long-winded. I don't really expect many people to watch this. We're at 27 minutes. That's me just babbling about Elliott waveform analysis. If you liked it, I mean, go ahead and subscribe. That was a lot of jargon. If you've made it this far, congrats. Can't wait to see what the analytics tell me. Bet you'll lose most people at like 2 or 3 minutes, but whatever. Happy trading.